Welcome back friends to another property update video. So as you can see from the title and from a short that I recently released, the Bank of England has now imposed its 9th consecutive interest rate rise. Now this has obviously been done to try and calm down and bring down inflation, which has obviously leapt to a 41-year high of 11.1% on the back of rising energy and food bills. Now here's a pretty little chart that just shows this, and I know some of the older viewers of this channel will obviously say it's not as much as we've seen previously. I fully agree, although times are slightly different. There are some things that we need to be aware of. We're going to see immediate pain for some homeowners, and Moneyfacts has reported that a rise of 0.5% percentage points on the current average standard variable rate of 6.4% would add approximately £1,509 onto the total repayments over 2 years, which, let's be honest, as our disposable income is going down, is definitely not the greatest news. Now, the bank has also warned in a financial stability report, which came out earlier this week, that the average mortgage repayments would look to increase by £250 a month, placing more households at risk of default next year. And again, guys, this is something that I didn't want to happen. This is something that I was obviously urging you guys with in relation to overspending and overbuying and leveraging, because I said alongside negative equity, there could be the possibility of stretching yourself too thin, which could lead to risks that they've mentioned here. Now, the financial markets, however, do see the bank rate hitting 4.6% over the next 6 months, which is actually slightly less than they predicted a few months ago. So again, time will tell whether they're right. Now, the Chancellor Jeremy Hunt stated the following: high inflation exacerbated by Putin's war in Ukraine continues to plague countries across the world, eating into people's paychecks and driving up food and energy prices. Now he states, I know this is tough for people right now, but it is vital that we stick to our plan, working in lockstep with the Bank of England as they take action to return inflation to a target. Now I have my own thoughts on that comments there. Let me know what you guys think below. Now this whole video won't be all doom and gloom, but house prices are now the most unaffordable since the Victorian era. The average cost of a house in the UK is now 8.5 times the typical annual salary. However, it has been worse. In 1899, my friends, it was actually more, only marginally, by 8.6 times. So read into that what you will. Obviously, it's not great news for anyone looking to get on the market, and it's not really much of a consolation. Now, something I have mentioned, I think on 4 or 5 videos now, is around half of the owner-occupier mortgages, which is around 2 million, will be exposed to rate rises over the next years, according to the Bank of England's 2022 Financial Stability Report. So what does that mean? Potentially more defaults, some negative equity perhaps. There could be opportunities if you're an investor, but could be also problems if you're looking to refinance. Now, Alice Guy stated that we're now looking into times where only the rich can buy a home. I would slightly argue with that, because although buying a residential is increasingly more difficult, obviously I hope many other videos on this channel will help you guys get ahead a little bit quicker. So please do obviously subscribe if you're new to the channel, because the underlying goal is to help you get on that property market quicker, faster, and by making less mistakes than myself. Now, moving on to what the estate agents are saying. Last month, 72% of EAs made most of their sales below asking price. Now, there's many reasons why properties go below asking price. First, and probably the most obvious one, is that they were overpriced in the first instance. And also what I believe is we're moving now from a seller's market to a buyer's market, as we start to see more increased rates and more pressure on people's back pockets. Now, almost 3/4 of estate agents had most of their property sales in November agreed below asking price. Also, my friends recognize that property acts slightly different depending on the season, so we are heading into December, where obviously transactions are likely going to decrease. And the article then goes on to state that the number of new buyers registering per member branch dropped again to 52 in November, down from a high of 86 in November, which is probably where we were looking at sort of the peak. And there's a few more other statistics there, which I'll just leave there for a few moments. There is some good news for renters, or should I say slightly better news, because nothing at the minute really feels like good news, which I will explain in a few moments time. Now, Nathan Emerson, the chief executive of the Property Mark, stated that the sales market is firmly back in the hands of buyers, something I just mentioned a few moments ago, who have been on the back foot for 18 months. More property is available, and the competition between those has cooled substantially. I remember a time, especially when stamp duty holidays and furlough was a thing, people were going absolutely crazy for properties. So for those motivated to sell, good solid buyers are still prominent, most likely those with cash who have been sitting on their hands. Now, as for the lettings, we are starting to see a decrease in the demand, and the knock-on effect is that fewer agents are seeing rent rises. Now, I got a few comments a while ago stating that, well, as rates increase, landlords will just simply increase the rent on their tenants. And I disagreed with that, because it's not feasible. It's one thing thinking, yes, that's normal practice, but we're seeing a cost of living crisis. People can barely pay their rent as it is. So if you as a landlord simply increase that rent upon someone in an area where, let's say, demand isn't that high or people are willing to overpay, you're setting yourself up in a lose-lose situation, because at the end of the day, the tenant can only pay what they can pay. And it states here that it's possible that prices have peaked, something I believe, and landlords are well aware that now any more rises won't necessarily be achieved. Moving on, the Bank of England officials suggest that UK can tolerate a 20% drop in house prices. Interesting. Now, I couldn't get my trusted highlighter out on this, so it's not looking too pretty. But essentially, UK house prices could fall by as much as 20% without causing distress to most homeowners. And just note, this article isn't necessarily saying that they will drop by 20%. It's just saying that that's what we could essentially handle. Credit Suisse did expect a 10% decline in house prices in 2023. And other city economists also predict large falls too. Something again, my friends, I have been saying for a long time. I could be completely wrong. It's just where my gut is leaning towards. And this was quite interesting because speaking to the press after the Bank of England published its financial stability report, within that, Cunliffe said that he expected some of Britain's 2 million buy-to-let owners to sell and take capital profits, since the vast majority are on interest-only deals and will be hardest hit by rising interest rates. So I think I did in my last week's video that landlords are starting to leave the market, or more landlords than normal. And I even think the biggest landlord in the UK is also selling up some of their portfolio. I always say that if you're not in this game for the long term and you're looking for an exit, the last probably 6 to 12 months was probably the best time. So we probably are going to see a lot of landlords leaving. So that's going to be very interesting. And essentially those sales will affect house prices, Cunliffe said. But of course, house prices have gone up nearly 20%, as many of you know, in the past 24 months. So if you think about it, there is a lot of space before you start to see negative equity and distressed sellers. Interesting. Time will tell. Obviously, every specific area is different. Now, just very quickly, I'll just leave this on here. This is a UK house asking price buying frenzy after the pandemic has given way to more caution. And this is obviously what we were seeing. And then we've seen this. And all of a sudden, when most people are thinking the property prices are going to drop, boom, things went absolutely crazy. So it's going to be interesting times ahead for the next 12 to 24 months. One thing that we always know, and this is something I always say, in the long run, asset prices, property prices will always tend to go up. And here we can see that the house price dip, but they're predicted to fall by 9% in the next 2 years, also shows an increase following that. So you may see a little bit of this, but if you can ride this out, even as an investor or a homeowner, things should hopefully start to pick back up in 2025, maybe at the end of 2024 when rates stabilize and hopefully the economy starts to come out of a recession, which I believe we're going to be in for the next year or so. Moving on. Now, I mentioned Credit Suisse stating that house prices are predicted to drop by 10%. So I'm not going to repeat myself and go through all this information here. However, something interesting, at least I found it interesting, my friends, is that UK is probably going to be hit the hardest by rising interest rates. Now, we know the Fed increased their rates yesterday, or should I say 2 days ago, as of releasing this video, because most of the US fix their mortgages for 30 years, whereas in the UK, we tend to fix our interest rates between 2 and 5 years. And also, mortgage interest payments as a share of disposable income are expected to rise by 7.3% to 9.6%, which is actually the highest since the financial crisis. So again, another bashing to our back pockets. Moving on. Competition in the housing market drops by over a third. This is something, again, could be slightly seasonal, or it could be what I believe was always going to happen. Now, I couldn't get my highlighter to work, my friends, but essentially competition has dropped by over a third, from 11 new buyers for every new property instructed to just 7 buyers for every property for sale in the members branch. And also, friends, just know that when I state something like this, it is obviously area specific and it depends on the person giving the information. Buyers were caught in bidding wars back in the day, but they are now back in the driving seat as the total available properties on the market continue to rise on average of 33 properties per estate agent branch, which is a 74% increase in homes. So I definitely think in 2023, we're going to see more properties in the market. That is something that I truly believe is going to happen. So friends, that's just a very, very quick update. Let me know your thoughts on where you think the property market is going. Until next time, my friends, thanks for watching.